So let's talk about CleanSpark. We're diving into the pretty wild world of Bitcoin mining, and these guys are one of the biggest players out there. But here's the thing, they aren't just mining some digital currency. Nope, they're actually building a real physical empire of pure computing power.
So how exactly do you do that? How do you build a real-world empire on, well, digital gold? It's a pretty wild question when you think about it. You've got this mix of super advanced tech and, old school stuff like buildings and power grids, and you need a ton of money. All right, let's get into it and see how CleanSpark is trying to make it happen.
Okay, Section 1, CleanSpark, the Bitcoin builder. So first up, who is CleanSpark? Let's try and wrap our heads around just how big this whole operation really is.
Okay, so at its heart, CleanSpark is a massive industrial-scale Bitcoin miner. And the key phrase you got to remember is self-operated. See, they own and run their own data centers. That gives them total control over everything, their operations, their costs, and in this business, that is absolutely crucial.
Get a load of this number, 50 exahashes per second. That's what their operational hash rate is expected to hit. Now, if you're wondering what a hash rate is, just think of it as the total horsepower of their entire mining fleet. And 50 EHS, that is just a mind-bending amount of computing power, all of it pointed at one single thing, mining more Bitcoin.
And that hash rate we just talked about, it's not just some number on a screen. It's real. It's over 240,000 individual mining machines, all deployed and humming away. We're not talking about code floating in the cloud here. We're talking about actual warehouses, just packed to the gills with powerful, heat-cranking hardware.
So what does all that hardware and all that power get you? Well, it gets you this, a treasury holding of over 13,000 Bitcoin. Depending on the day, that's a huge strategic asset. And it's important to know, they don't just mine and sell. They actually hold a big chunk of it right on their balance sheet.
Now in this game, efficiency is literally everything. Why? Because your biggest cost, by far, is electricity. So we measure that efficiency with something called joules per terahash, or J/TH. The easiest way to think about it is like fuel economy for a car, miles per gallon. The lower the number, the better. And CleanSpark's fleet, it's really good at turning electricity into Bitcoin.
All right, Section 2, the Bitcoin mining engine. So we've seen this scale, now let's talk money. How does this massive engine actually translate into dollars and cents? Let's find out.
And wow, the results are pretty staggering. In just one quarter, Q3 of their 2025 fiscal year, they raked in almost $200 million in revenue. That's a 91% jump from the year before. And it's all being driven by two things, higher Bitcoin prices and, of course, their constantly growing mining power.
And check this out. On paper, their profit looks even more incredible. We're talking a net income of over $250 million. Now, it's super important to understand that this number includes the mark-to-market or fair value gains on the Bitcoin they're holding. So it's not all cash sitting in the bank, but still, what a massive headline number, right?
So if you break it down, you can really see the formula for success here. Over 9 months, right, they mined almost 6,000 Bitcoin. They did so at an average price over $91,000 a coin. And they did all that while keeping their energy costs nice and low, around 5.5 cents per kilowatt hour. That right there, that's the engine. Okay, Section 3, the high price of growth. But, and this is a big but, here's where the story takes a really interesting turn. See, building an empire, it costs a fortune. All that incredible growth we just saw, it comes at a very high price.
So get ready for a little bit of financial whiplash. You remember those huge revenue numbers, that giant on-paper profit? Well, despite all that, their actual operating cash flow for those same 9 months was negative $341 million. That is a massive cash burn.
And this really gets to the heart of their whole strategy. It feels like a paradox, doesn't it? You're making all this money on paper, but you're burning through cash like crazy in the real world. So you gotta ask, where's all that cash going?
Well, this chart gives us the answer. The money isn't just vanishing into thin air. It's being plowed right back into the business, aggressively. We're talking more than $500 million spent in just 9 months. And it's all going to new miners, new equipment, new data centers. They're literally pouring every single dollar they can find, and then some, back into one thing, growth. Okay, so that leads to the next logical question. How on earth do you keep spending that kind of money when your day-to-day operations are actually burning cash?
Well, you've got to find fuel for that fire somewhere else. Let's get into Section 4, fueling the expansion.
And here it is. This is the other side of the coin. Look at that. They brought in almost $700 million from financing activities. This is the answer. This is how they fill that huge gap. They are raising massive amounts of capital specifically to fund this breakneck expansion.
And a huge piece of that financing comes from taking on debt. You can see their debt stack here is pretty significant. The big one is a large convertible note, and they've also got a pretty hefty line of credit from Coinbase. These are the financial levers they're pulling to build that physical empire.
And get this, they are not slowing down one bit. In November 2025, they announced they're raising another $1 billion. And what's the plan for that money? Well, it's pretty much the same playbook. Pay down some of the old debt and then pour the rest right back into buying more land, securing more power, and building more data centers. It's this cycle of perpetual growth, and it's all being fueled by the capital markets.
So, that brings us to the big question. What's next? With a strategy this aggressive, this high stakes, what does the market think about it all? And what could happen down the road?
Well, if you look at how the market values them compared to their peers, using a metric like enterprise value to sales, you can see something interesting. CleanSpark trades at a bit of a discount compared to a big competitor like Riot. And what could that mean? Well, it might suggest that investors are just a little more cautious, maybe a little wary of this super aggressive debt-fueled growth plan.
And this number right here, this is really telling. Around 20% of their public stock is being shorted. Now, what does that mean? It means there's a pretty big chunk of the market that is actively betting the stock price is going to fall. It's a really clear sign that not everyone is sold on this strategy. There are definitely some serious skeptics out there.
So really, when you boil it all down, everything hinges on one thing, the price of Bitcoin. Let's look at the possibilities. In the base case, if Bitcoin's price just stays high where it is, the strategy probably works out. In a bull case, or Bitcoin's price goes to the moon, well, they look like absolute geniuses. But there's the bear case. If the price of Bitcoin tumbles, all of that debt they've taken on suddenly becomes a huge risk.
And that leaves us right here with the ultimate question. Is what CleanSpark is doing an incredibly bold, visionary bet on the future of Bitcoin, building a rock-solid foundation that'll last for years? Or is it a massive, high-stakes gamble with borrowed money that could totally fall apart if the market turns? The answer, it seems, really depends on what Bitcoin does next.